Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar went through a rollercoaster ride overnight and briefly posted a fresh intraday high of 70.63 before clearly being rejected and now focusing back on the downside. It is assessed from the recent call from this bearish outside range day that a break or close under 69.50 would give further indication to a bearish case. With no ADX to the bull trend and also the fact that the RSI and the MACD breaking down does give some renewed views that a bearish bias could be coming back towards the 68 cent region or even to where this trend line is, seen somewhere close to 67.40. 50. Overnight, the conclusion of its two-day meeting of the policy seating with the US Federal Open Market Committee is that the central bank announced it would maintain its target range for the federal funds rate of 0 to 0.25% and continue its massive asset purchases. The current monetary easing steps were both introduced in March. However, Federal Reserve Chairman Jerome Powell said that the bank will keep its interest rates down for a foreseeable future, and noting that it is going to take some time before any kind of reversal, and that is possibly out to around 2022. So that's a pretty much dovish statement in terms of how the Fed is seeing the unfolding economic outlook. So with the two attempts to the upside failing, let's see if the market does break down. Euro took a step to the upside as the US dollar broke down even further. The dollar index, which measures the greenback strength against a basket of 6 major currencies, posted a fresh low of 95.68 before rebounding. This viewed the euro rallying up to 114.21. There is clearly bearish divergence from the RSI. The ADX is overheating. I feel that where we are at these levels, like back in late February, early March, is that we are due for a correction, and therefore the bearish sentiment should return, and I'll be looking for a move down to 113.60 to 113.20. Now a break of 113.20 would reinstate the downside back to about 111 to about 110.5. The dollar yen outlook, well, the market has reached its target of 107.0510. Now with the bearishness still holding and with both indicators in sync, the call is now down to 106 figure 40 and reassess from there. I do feel that the market has potential to this fall as the candles are getting slightly bigger, so any recovery is limited. The pound, well, negating that hanging man, has now posted a gravestone doji. Two negative candles that gives further indication that the market should break down further, but I'll be waiting for confirmation. And that confirmation is first of all a break of 126.75 and then down to 126.10 and reassess from there, because we could be seeing a lot lower to around 122, but there's a few levels to break on the downside before getting that call. The dollar CAD, well, there is divergence. There is a dragonfly doji, that is, and also the fact is that the market is showing potential to recover further. If you're not familiar with the dragonfly doji, it's a Japanese candlestick and acts as indecision to the investor's view, and therefore the market has, from the T shape, could actually see a further rally up to 134.90 as a potential target. Well, I'm still a little bit skeptical on the gold price action, even though we've seen a strong rebound once again off that level of 1,670 last Friday. The three bull candles are now getting back towards the top side of the range. Somewhere, I believe, could be viewed from 1,740.43 to 1,758 to 66. I'm not a bull up here. I'm very much, in fact, feeling that there could be another similar pattern coming through here like before. But keep an eye on that MACD, as it previously did fail and may do once again. Wrapping up with oil, well, the market dropped away from the 3-month highs of $40 a barrel, and now from a technical point there is bearish divergence, and also with the MACD sinking, I do feel that we are seeing a pullback to $36 a barrel, maybe low at about 34. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. Hope you enjoyed a great start to this new day.